You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we go beyond our usual stomping grounds of, let's say, your Teslas and your SPYs and all the other fun stuff, and move a little bit farther afield, go out into the world of futures options, see what's lighting it up out there. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, a legion, a plethora, a litany of ways for you folks to get access to the content, of course, available on demand, just about every platform under the sun these days. If you want to go above and beyond, join us live, join us for the exclusive programs we have throughout the week. Then the optionsinsider.com/pro is the place to go to learn more. And of course, however you listen live after the fact, keep sending in those questions, those comments. We do love to hear from all of you out there. Let's see who we're hearing from on the program today. Joining me once again in the CME hot seat this week, I'm pleased to welcome back for our semi-annual check-in, Mr. Derek Sammann, the Senior Managing Director and Global Head of Commodities and Option Products over there at CME. Derek, welcome back to the program. It seems like every time you join me, your title gets longer, sir.
It does indeed. It's sort of the CME way, man. Long titles mean good things are happening. Good to be back with you guys. This is Christmas edition, so excited to be here for the holidays.
Yeah, Christmas edition. Go do things a little bit different. We'll get to the movers and shakers in a bit, but before we get there, I love when Derek joins me because he always comes armed with some great data. He's kind of, like I said, he's the head of options over there, so he watches all these products all the time, so he has a lot of great insights into what's going on over there. Derek, I think it's fair to say been a bit of an interesting year from a futures options perspective over there. A little bit of vol, a little bit of volume, all sorts of fun things going on over there. So let's start. It's been a while since you've joined us. Catch us up. What are some of the big trades, the big trends, the big developments you've been seeing in futures options over there at CME this year, sir?
Yeah, great to be back. And it's fun when I come back every couple of months because invariably something has changed or a lot of things have changed from the last time I was here. I got to tell you, we were talking right before the beginning of the show, and normally get to this time of the year, we're winding down, we're doing holiday parties, we're kind of, planning for next year, and we don't have time to take a breath right now. Our business is coming in hand over fist right now. Our options business is up. Brace yourself for this, Mark. December month to date, our options business is up 88%. Quarter to date, up 62%. This is not normal stuff. I mean, interest rates and equities are up triple digits December this year versus last year. I mean, that's both a function of volatility returning this year, but also a reflection of being relatively quiet fourth quarter of last year. So some combination of both those things. But, the minute you think you get your handle on it and things are kind of calm and in check and normal trends are in place, the market throws volatility at you. And that's what we're here for. Our customers are, coming to us in record levels right now. We're seeing record levels of business coming from overseas, particularly from Europe this year overall. Our U.S. business year to date is kind of flattish, maybe down 1 or 2%. Options business globally for full year is up 5%. All that growth is Europe and Asia, Mark. I mean, it's just incredible how much business we continue to gain by more deeply penetrated and bringing on more European and Asian participants in our markets. And, we electronify markets and they expose regional participants to our global benchmarks, and good things happen. So there's just a lot of good stuff happening out there. There's volatility anywhere. You can play it in any asset class at CME Group, and we're seeing that this year with a really, really strong finish to this year.
Derek, when we kicked off this year, everyone was asking me, and I was asking everyone on our network, we were coming on the heels of a ridiculous record year from an overall options volume perspective, pretty much across the board. And everyone was wondering if that party could continue coming into 2021. I was on the cynical side. I thought 2020 was a bit of an anomaly. Obviously, everyone was kind of forced to stay home, and so trading exploded as a result. Didn't seem like that was the trend was going to continue in 2021. And lo and behold, what do we see? More crazy trends kicking off, everything from meme stocks to volatility across the board, new variants, everything else. It's been just an explosion, a tsunami of volume pretty much across the board. I'm curious for you, Derek, when we were kicking off this year, did you think now we'd be here in December? You're talking about December blowing the doors off from a volume perspective. And, these kind of volume levels that are meeting and indeed exceeding what we saw last year.
Yeah, I mean, we were hoping just to get to a point where we could match 2020 because we had such insane amounts of volatility and market dislocation from, say, March to May of last year. And then the back half started to quiet down a little bit. So we kind of came into the year kind of thinking, oh, man, this could be just one of those years you just got to grind it out. And we did. We ground out the first 6 or 7 months, and then we started to see a little pickup in activity. Then we saw the reversal in, energy prices with first crude, flying up from 30 through 60 up to 80 back to 75. You saw natural gas go crazy. And you started to see now, even just this week, right, with Powell finally addressing the fact that there actually is inflation officially recognized by the government now, and that they're talking about 3 rate rises in the next year. It's what the markets already knew, and it just put us on a nice path. We had a great day yesterday. We're having a phenomenal month and a phenomenal quarter. So I think we were just hoping to grind out a kind of flat year, and we're ending up going to be putting up another record year this year. And, it's almost across the board. I mean, if you look across our businesses, 4 of our 6 businesses are, flattish to significantly up. Bizarrely, brace yourself, Mark, the year to date, our fastest growing product set in options is, wait for it, ag options. Ag options, corn, wheat, beans are up 14%. Rates is second. This is year to date. Rates are up second at 8%. And equities are next up at up 4%. So not only are ags the only product, or is the singular product that is the fastest growing this year, it's by a long shot. I mean, rates is in next at up 8%. So it's a great story. The other 3 asset classes are kind of flattish to smalls down. But I got to tell you, it's been a fantastic story. Ags were huge in the first half of the year. They started to slow down a little bit, but that's been offset by what we've seen as a real pickup in energy and fixed income, and particularly equities this quarter as well. So listen, it's the benefit of being the global exchange that's got the global benchmarks under its belt, that's delivered electronically across time zones. And we're seeing customers come to us in record numbers, and we're seeing that in terms of the pickup in volumes. And, even in markets where we're not really seeing huge lift in volatility, people are positioning themselves for 22 because it's going to be a really, really interesting year with the rates on the move. And, we'll see what happens with the rest of COVID. There's a lot of uncertainty out there right now. So we're here ready to serve our customers.
Derek, you're giving fuel to all the ag heads out there who write in and say they want the show to be nothing but ags all week, every week out there. So you're just adding fuel to the fire now, Derek. Now I'll have to talk about all 8 contracts in oats every week because of you. I blame you out there. So. But, it's
You're welcome.
It's interesting. We have seen a lot of trends get highlighted in the broad equity option space. Everyone all year has been talking about, the retail, the smaller, the one-lot traders, call them what you will. This just explosion of small paper, and all the focus has been out there in the Teslas and the meme stocks and all that stuff. But you guys over there at CME have seen a similar explosion in the small stuff. In fact, it seems like you guys can't launch enough micro or mini contracts, and every single one you launch is off to the races. Just everything small seems to be ridiculously huge these days, Derek.
Yeah, I think it's a great point. I mean, listen, I think we've seen a lot of structural shift in the composition of participants in markets. And I think that you've seen retail rise as a segment of the population that has got a very different voice now than it did, say, even just 12 or 15 months ago. The meme stock revolution has certainly shown us that. You know, we've had micro contracts. We pioneered micros across the board. Our first micro contract was in micro FX in 2009. We listed micro gold in 2010. We didn't really see a pickup in a demand for, tiny retail size, bite-sized contracts until we put the micro e-minis out there. And I think it was 2018, 2019. And that just picked up on an underlying trend. The reason we actually waited that long to launch equities in micro format was we just weren't hearing from our customers or our intermediaries, channel partners, broker distribution partners. There was this, massive latent demand. But, when you start to see indices double and triple in value, the size of that contract gets awfully big, awful fast. And that also makes it really interesting to play. So some combination of the underlying contract increasing, therefore the notional size of that contract increasing, coupled with directional play in equity, we had retail participants come to us and channel partners saying, hey, people want to seek the safety and security of a fully regulated market, listed derivatives. But man, your minis are now an institutional size contract with, Dow at 35,000. So it's like, oh, that's a good point. So we spent some time reworking the contract and we proved the theory and client demand with equities. And then we followed on its heels with a number of contracts. And certainly probably our most exciting contract we've launched in microfilm, that was micro WTI. That has been a massive hit. Our ADV is almost 100,000 contracts. That's average daily volume. That's not total volume since launch in July. That's daily volume in these things. So we are absolutely thrilled with the pickup and uptake. Now, that being said, Mark, it's not as easy as close your eyes, chuck spaghetti against the wall, and hope that something sticks. This has been with a significant amount of partnership and communication with our channel partners, our broker partners, our distribution partners, and hearing from them what if their clients are telling them they would like access to. And when you see oil go from 70 down to 30 back up to 70, that's the kind of a volatility profile that retail traders like. That's meme stock-esque, if you will. So we needed to have a product that would sit comfortably inside our global benchmarks portfolio, but appeal to customers that had, a portfolio and a risk portfolio, risk tolerance that was matched by the products they had access to. So we worked with our channel partners and developed a contract that worked for them. And we've seen that that has been successful, as have the other series of products we put out there also gained traction over the course of the year. Micro Bitcoin, micro Treasury yield. We just put micro Ether out there. So it's the combination of your favorite micro plus crypto. And that's a fun combination right there. So it's been a great run. A lot of credit goes to our research and product development sales team that's connecting to our customers and our channel partners, making sure that we got the right product size for the right risk tolerance, size for the right community. And listen, retail traders are here. They've got a bigger voice than ever before. And they are putting demands on platforms and service providers like ourselves to give them products that work for them and fit comfortably inside their risk tolerance profile.
It's funny. I think back to that episode we had of TWIFO's. Tim McCourt came on, and with Sean and myself, and we commandeered a hallway down at the FIA Boca conference, and he came on just to talk about a bunch of things. And one of the things was the launch of the micro futures and the equities. And it seemed interesting. It seemed intriguing to me at the time. I don't think Tim even really realized what lay in store for these products, how they would become almost overnight the biggest hit in CME history. So yeah, it's been an interesting road. And that was even before the pandemic, Derek, and then the pandemic took them off to the next level. So it has been fascinating to watch the growth trajectory of these micro and mini products. Can't seem to launch enough of them, Derek, which I guess is a good problem for you and your team to have.
It is indeed. I think you'll probably see a building on that theme. I understand there's some folks working on nano contracts now because micro isn't small enough, so maybe a nano is the way to go. But it's certainly interesting, and it's making us be more cognizant than ever before of the entire ecosystem of market participants out there. We've got to keep our eye and make sure that we're servicing our commercial customers, the end users. We've got to make sure that we're servicing the hedge funds and asset managers, pension funds, insurers, liabilities guys, long-only guys. We've got to make sure that we've kept keeping our eyes on the needs of the market makers to provide continuous liquidity 23 and a half, 5.5 days a week. And we've got to make sure that we're focusing on retail and their needs as well. And, done right, Mark, I think our market is reflecting we're doing that right. It's a market that builds. It's a market that grows scalably. It's a market that's globalizing with outpacing growth outside the U.S. and strong growth inside the U.S. And those are good markers and good health indicators. Not to mention the increasing, open interest we're seeing in some of these options markets as well. So it's a challenge. It's a lot of fun. Our customers are demanding a lot, and we're providing superior service, and we're seeing that in the resulting volume.
Now, Derek, you mentioned half jokingly there the forthcoming nanos coming out sometime next year, which are effectively one-to-one options anymore, no more multipliers. So speaking directly to that audience who wants a small contract size, but also stripping away a lot of the benefits that come with options, namely leverage, which is one of the primary reasons people trade these products. I'm curious for you, Derek, just from a purely product perspective. Obviously everything small is big, but is there a point where there's too small and you kind of lose the benefits of the options product? How do you guys view the smaller side of that? Is there too small that loses some of the value, or do you think maybe there's a utility in all these things?
Yeah, I think you're right. There's an optimal frontier where size is just right and ecosystem participation is just right, and you've got to weigh all of those things alongside one another. I will tell you honestly that at this point, no one has told us that our micro contracts are too big. We're just getting broad participation in the uptick across micros. People love them; they can't get enough of them. But not a single customer has yet come to us and said, man, your micros are too big for us. So until we start hearing that from a broad swath of the range of participants in our ecosystem, we'll keep an eye on it. But nobody's pushing us on that right now. I mean, I would say our maturity profile shows us that we've still got a long ways to go in a couple of these asset classes. The yield futures we've launched, nice little start there. We know we've got some good amounts of growth to run there. Certainly the change in rates environment, we think could make that a very, very interesting product for 22 and beyond. Micro Ether, we just launched that December 6th. We think we're super excited about what we're seeing that. In the first week of volume, with 21,000 contracts traded in the first week. We're really excited about that. So no one is coming to us saying, man, I love your products, but your micros are so big now. So we're when we get that feedback, we'll think a little bit differently. Right now, we're watching everything. We're keeping our ear to the ground, talking to our customers, talking to our partners. But right now, we think micros are serving that need, and we've got a long ways to go to continue to build that out.
Well, you touched on vol. It's, of course, the lifeblood of all things options out there. Last time you joined us, you were talking about this newest addition to the CME vol offering, which is CVOL. Kind of an interesting approach to it, taking, a broad vol approach. People usually think vol, they think equities, and that's certainly a valid viewpoint, but there's vol in other products too. So interesting. You guys have kind of been exploring this now with this CVOL, not product, but index suite. So catch us up. Where does CVOL stand now, and what are you planning to add in the future?
Yeah, so CVOL has been a great project for us. And as we've talked about the last couple of times I've come on the show, this has really been a point for us to both prove out the validity and get a sense of the demand for product-specific volatility indices. And so we have done that since we run the benchmark options markets in every major asset class benchmark, from FX to equities to metals to energy and so on. So it's allowed us to use our own deep liquid options markets and come up with our own proprietary volatility indexes and then roll those out and share those with the world. So if any of your listeners want to know what I'm talking about, just type in CVOL into your browser and we'll be the first thing that pops up at CME Group Volatility Indices. And we now have a total of, I believe, 40 underlying, actually a little bit over 40 underlying indices, some of which are individual products. So there's a 2-year CVOL index, there's a 5-year CVOL index, there's a gold CVOL index, there's a WTI CVOL index, but there's also, we've built baskets of indices as well. We've got a treasury curve CVOL index based on the 2s, 5s, 10s, and 30s. We've got a G5 FX CVOL index, which is euro, sterling, yen, Aussie, and Canadian dollar. We've got an ag products CVOL index based on corn, bean, wheat, soybean oil, live hogs. Everybody loves their live hogs, live cattle, and milk of all things, and so on. So not only are we leveraging our own deep liquid underlying options markets, we're using those to construct now these really, really helpful volatility indices, both individual products plus baskets. We're right now disseminating those on an end-of-day basis. As I talked to you last time I was here, we're working on getting those to be real-time calculations. We're hoping to get that up early part of next year. And then based on demand and what we've already heard from our customers, they love the idea, man, oh, great, where can I trade these things? We said, well, we can't trade them just yet. We'll get them to real-time first, and then we'll see where we go from there. So the feedback has been fantastic. And if you ever want to know what's going on in any of these asset classes, just type in CVOL into your browser, take you right to the CVOL landing page, and you can look up you've got free history on every one of these products going back 2 years. You've got a dashboard here that shows you just an incredible amount of information, not just about the headline volatility right now of the at-the-monies, but we've got what's called an up VAR and a down VAR that shows you the variance between calls and puts. So basically, it's a risk reversal. How much, what is that premium trending like at the upside to the downside? You can look at trend over the last 5 days, trend over the last year, trend over the last 6 months. So all that data is available for free on our website with a 2-year history available free to everybody. Take a look at it. And once we get to real-time dissemination early next year, we'll be taking a feedback session with customers about what may turn into tradable products, but we need to assess the demand for that first.
I like that. So that was my next question. So early next year, you thinking maybe Q1 we could see real-time CVOL, Derek?
Well, we're hoping to. That's what we're shooting for. So I'm probably authorized to say early 2022, but I'm optimistic that we'll be there by end of Q1. So that's what we're shooting for, but probably certainly first half. And we've got a lot of work that we're putting into it. We've been working on this for a good part of the back half of this year. Once we got all the underlying products up by second quarter of 21, we then focused to, right, let's get the work in place to get these disseminated for real time. So that'll be the next exciting development. And then where we go from there is a function of what the customer feedback is for potentially tradable products.
I like it. And if you're looking for these yourselves, listeners, like Derek said, just type CVOL, or if you want to be certain, CME and CVOL. It comes right up. You have all the different offerings there. Treasury, vol, euro dollars, FX, metals, energy, ags. And Derek, I like the aggregates. I find myself going to the aggregates more because it's not something we've seen before, right? Especially like your broad commodities basket. It's kind of a little bit of everything. Have you been watching this one of late? And anything else intriguing to you, or you find maybe some surprise developments as you've been watching these various aggregate indexes over the past year?
Yeah, I think it gives you what's interesting is, when typically people think about volatility, you said it already, people tend to think, oh, well, volatility happens in equities. And so if I want to know what's going on in financial markets, I should go look at what's going on in equity volatility. And it's just not true. When you look at the divergence of what's happened in the crude oil market this year, or more importantly, the natural gas market this year, none of that is captured in equity volatility. That's all captured in the underlying products themselves in the asset classes. So what we have loved doing, and you said exactly where I was going to go. The individual products are interesting. Even the baskets are interesting. But then we've got a commodities level CVOL index, which has WTI, so crude oil. It's got Henry Hub natural gas. It's got RBOB, which is gasoline. It's got New York Harbor, which is basically diesel. Corn, beans, wheat, hogs, cattle, milk, gold, silver, copper. That right there, that's your inflation basket, right? If you're talking about anything that's driving inflation, it's your hard commodities underlying index inputs. And so if you want to get a good sense for what's happening in different parts of the economy or what underlying sources of inflation are, this tells you exactly what they are at individual input level or at aggregate basket level. So looking at the commodity CVOL index or even just the energy CVOL index, which remember, the government will put out their CPI numbers and then CPI minus energy. Well, energy is still a cost to the consumer, so we have to understand what's going on there as well. All that granular data or at the aggregate level is available through the CME CVOL indices. And the insight you get from that beyond just looking at a headline equity volatility is so much richer. And then you can look at where and how that volatility is displayed. And, how much is the call trading over the put right now, because that's your real, talk about a fear gauge. that's exactly telling you what the market's worried about. So you can track all that. And it's such rich information that it's the uptake of this has been really, really astounding. Better than we had thought, even better than we had hoped for.
Our live audience is reading my mind here because they're jumping ahead to my next question for me. So I'll just read off what Options Queen wants to know here in the chat. She says, I like CVOL. It's interesting. She says, but are there any more tradable vol products like VolQ coming next year from CME? So Derek, she read my mind. What are we cooking up in the tradable vol landscape for next year, sir?
Yeah, well, as I said, we've got nothing I can talk about right now other than, the direction that we're going is making sure that we're taking our end of day calculations for CVOL, making those real time by the end of Q1, hopefully. That then would be our path to tradable vol products. Our, VolQ is out there. Another interesting product, giving customers a different way to think about volatility, in this case, obviously through one particular lens, different from the VIX that's out there right now. And that's had a lot of interest, not a lot of trading uptake yet, but a lot of kind of intellectual interest. But the direction we're going is, likely to scale volatility as a tradable asset class is along the lines of what we built here. And if you just kind of open up that CVOL page and you're looking at 40 plus underlying products and indices, and that's the direction we're going. So nothing tradable at this point. We've got to kind of walk before we run with scissors. Running with scissors is the equivalent of launching a product. So we're going to walk and run before we start running with scissors.
I like that. Running with scissors is the equivalent of launching. I've always flashed back to that scene from Cheers where Fraser was running with scissors. A classic scene in any sitcom throughout time here. But Derek, we got to get into the movers and shakers. But really quickly, we touched on a lot of great trends and interesting developments over there at CME. Anything else really pop into mind you want to share with our audience before we dive into what's lighting it up this week?
The only other thing that we've seen a really, really positive trend on in terms of our option suite has been the rise of short-dated options. We've seen volatility across the board. Short-dated new crop options in our ag franchise has been seen. Our August is our most active months ever, over 10,000 contracts a day. Short-dated new crop options. Very seasonal, but very, very deep and liquid. We've seen WTI weeklies hit not only a single day volume record in November of just under 20,000 contracts, but we're seeing ADV of a little over 7,000 contracts. So we're talking about record or close to record days in our short dated energy complex and our short dated ag complex. And these are kind of like micros. You can generate different levels of interest and appeal to different kinds of players when you change contract size to the micro conversation, or you can change expiration. So you've seen the trend towards weeklies and then weekly Wednesdays and weekly Mondays. So, putting discrete points on the curve and letting customers choose what dates cover what particular risk they're trying to focus on, or giving them lower premium products just as they're shorter dated, really appeals. And it lets people take, short-term bets for relatively low premium set for very, very specific dates. So I would say just the general trend of shorter dated options, particularly on the commodity side of the house in ag and energy, have been a real a star. But there's so many other places that we're succeeding right now. It's one of those that doesn't get as much play as it probably should. But we're really excited about what those discrete points on the curve allow for our customers to do with us.
Well, let's see if the ags and the energy are lighting it up this week. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers. You guys know the drill by now. You've been listening all year, and many of you longer than that. This is, of course, a portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME this week. They trade a lot of different things. Derek, you know what I'm going to ask you next. Where should we begin our journey this week, to the light side or to the dark side?
I don't know, man. I'm going to be surprised by where you want to point us. How about that?
Okay, be careful. You give me the choice. We're going to go dark side most of the time. So we're going to kick things off. To the dark side we go, listeners. A bit of an odd assortment this week in the light side and the dark side, both sides here. Let's go to number 5 here. We've got live cattle at the bottom of our bottom 5. So I guess that's where you want to be, if you want to be in the loser. So the dark side this week at the bottom, off 1.12%. Number 4, feeder cattle. A lot of livestock in the movers and shakers this week. Number 4, feeder cattle off 1.19%. Number 3, it's oats. back to the ags that Derek was just talking about, off 1.63%. Number 2, palladium, off 2.17%. And Eurodollar is leading the pack to the dark side this week, off 4.88%. So we have just in the dark side alone, we have rates, we have metals, we have ags and livestock. So quite the smattering there just in the dark side. And now to the light side we go. Or our producers got clever. They made it a top 6 because Bitcoin is number 6, up 1.191%. It was number 1 in the other direction last week, off 15.21%. So a little bit of a rally, not quite enough, but a little bit of a rally out there in Bitcoin this week. Number 5 is platinum. So back to the metals we go, up 2.08%. Number 4, nat gas, an area that has been showing a lot of, let's say, volatility of late, 2.23%. It was number 2 in the other direction last week, off nearly 6%. Number 3, iron ore, up 2.56%. Number 2, it's lumber, up 9.21%. It was number 1 in the same direction last week, up 12.01%. And number 1 with a bullet this week, again, back to the livestock, lean hogs, up almost 10.5%. This week. It was number 5 in the other direction last week, off 3.56%. So, Derek, we have quite the plethora of options, pun intended, in front of us. We have energy, we have metals, we have livestock, most of which don't do a lot of options, but lean hogs starting to do a little bit more paper out there. Rates, crypto, what floats your boat this week? Where should we begin our journey, sir?
Well, I got to tell you, I'm fascinated on what's going on in the rates market right now, particularly with Powell and the Fed finally recognizing officially that inflation is a thing, and that they're anticipating now three rate rises into next year. Now, of course, our markets have been showing that for a couple of months now. No real surprise by the time I actually said it. The markets, as usual, are ahead of official policy on this. But I got to tell you, I think that now they start open the door to not are rates going to go up, but how fast and how far. And that's the exciting part. And that's where the options markets they're so critically important to manage any risk. So the duration and the speed with which, that market's going to move, we all know what direction it's going in. It's just a function of how long, how fast, and where does it stop. And I think that's a really exciting part. And then honestly, that's going to have an impact on every other product in the portfolio right now. It changes funding levels. It changes access to cash flows. If the Fed is going to start tapering and pumping less cash into the economy, that's going to change the ways in which a lot of these other assets are valued. So rates go up, the whole risk-free rate thing changes the equation. So it'll be interesting to see what happens to crypto over time, as well as rates start to normalize and go back up. And when you have a world where 10 years at 4 or 5%, you got to wonder what that's going to do for crypto. A lot of different views as to whether that's bullish or bearish, but that's what markets are made of. And people express those opinions at CME. So we're excited to have lots of different opinions out there.
Different opinions indeed, and many of those are expressed in the rates. So to the rates complex we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. You guys know where to go to find these reports, everything else we're going to talk about here on the show. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those will work. Both of those will get you to our This Week in Futures Options reports. Then go down to that drop down, scroll all the way down to interest rates near the bottom, second from the bottom there, and then hop over into U.S. rates, where we'll begin our journey. Before we dive into there really quickly, we mentioned another tool we don't talk about as much here on the show, but lately it's been on a lot of people's radar. It is, of course, the FedWatch tool, another great report and tool over there at CME. You want to find this one, just type CME and FedWatch into your browser. It'll take you right there. After what Powell said yesterday, getting a little bit more clarity out there in the curve in terms of what they're pricing in from a rate hike perspective, looking at the next meeting, which is on January 26th. 95% probability of nothing, but then you get out to March, and then obviously, given what Powell said yesterday, that probability changes quite a bit. You got pretty much a 40% chance of a 25 basis point rate increase there in March. You get out to May, and it's even more. It's 46%. So kind of in line with what Powell said of roughly, they expect roughly 25 basis point hikes sometime over the course of next year. So interesting stuff. But Derek, we don't get a chance to talk about the FedWatch as often as you probably should here on this show. I'm curious for you, What do you have to say for our audience about FedWatch? And have you been watching it of late as well? Because it's been fascinating to see how much it's been moving of late.
Yeah, it's funny. We're coming out of, by my count, close to 10 years of ZIRP environments, right? Zero interest rate policy. So the real short end of the curve. There wasn't a lot of mystery as to where rates were going the next day. That's all changed now. I mean, so much of the activity has been in the middle of the back part of the curve or the deferred part of the euro-dollar curve. But now the guns are swinging back to the front end of the curve. And that's where a tool like FedWatch is so critically important. For 10 years, we all knew that the next Fed meeting wasn't going to be a point to raise rates. Now we're in a world where there's a great deal of uncertainty. And again, it's back to the not are they going to do it, but when and then how quickly and how long will that last? So there's a very different set of questions being asked. It used to be will they, won't they? Now it's how far, how quick, and how long. And I think that's where a tool like FedWatch is absolutely invaluable. So yeah, absolutely hit that side if that's your gig. We've actually had such great success in FedWatch. We've actually built OPEC Watch. So within, I think, 6 weeks of an OPEC meeting, we open our OPEC Watch tool, and it gives your listeners exactly the same view in terms of, hey, what are the percent chances that the OPEC is going to make a change to their production quotas? And so the concept and philosophy is exactly the same. Leverage the deep underlying liquidity in your markets to gain insights as to what we think the market's going to do on any given marker. So I think it's a fabulous tool, and it will only become that much more important in a world in which we see rates normalization starting to happen. And on the rate cycle on the upswing, that FedWatch tool is gold for people to understand what's actually going on.
It is indeed. And let's find out what's going on out there right now. Go to the drop down, listeners. Go to U.S. rates and then pull up the Eurodollar. Eurodollar is, of course, off nearly 5%. Since our last show, I say 4.88%. Obviously, a lot of action going up out there this week. 3.1, almost 3.2 million contracts on the tape as of right now, listeners. So to say it's fairly active, I think that's pretty clear. Eurodollar is doing a lot of paper out there this week. You compare that to in some of the other complexes, that's more than some of the other complexes we talk about combined. Unlike the equities, which put up all their paper with less than a day to go, it seems like whenever we're doing the show. Eurodollars, you get to go out a little bit. In this case, we're going all the way out to the March contract that expires in about 88 days out there, doing about 17.5%. So 17.5% of 3.2 million contracts. That's a fair amount of paper out there, listeners. If you're wondering, vol out there in Eurodollars right now, at about a 32, almost exactly, off about 3/4 of a point. So people have this viewpoint of rates not being that volatile. And certainly if you go farther off down the curve, you go out to the 30-year, you're talking a 4 or a 6. So Eurodollar is a little bit of a different beast, hence why they're in our movers and shakers every week on the show, it seems like. In terms of skew out here in this March contract, last week the puts were about 6.9% rich to the at the money, so 6.9% bid above that 32 vol level. And this week, even more so, 11.7% rich. Last week, the calls looking cheap, 16.9% cheap this week. Still cheap, but not quite as cheap, 15.6%. So this skew actually looking more like an equity skew where the puts are bid up and nobody wants to touch the calls. And in terms of the most active contract out here, I love that it still trades in 16ths out here. It's old times. 99 and 11 16ths. I haven't said that in quite some time. Puts. That's what leading the dance out here this week. 101,000 contracts on the tape out here, listeners, including today, 52,500. So fully half of that volume going up today, 25,000 on Tuesday, about 23,000 on Wednesday, mostly opening earlier in the week. Obviously, we don't know what's going on with today's paper. And coming up here also 99 and 15 16ths. Also, the calls doing some pretty active paper this week as well. 75,000 almost exactly. Strangely enough, not a single contract today, but 50,000 on Monday, 10,000 on Tuesday, and 15,000 on Wednesday. So intriguing paper. Let's look really quickly, see if we can scroll down, see if we can see any other intriguing action and contracts that are doing a lot of paper. In Dece of next year, the 99 even puts doing about 70,000 contracts this week. So also a pretty active contract. Seems like those are definitely leading the dance out there. And Derek, we've already been chatting for quite a bit. We have time to squeeze in one more product category. What do you say we hang out in equities next, sir?
All right, let's go for it.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the equities. You folks know where to go now. Go to that drop down, pop out of rates, go back up a few ticks to equity indexes, go to U.S. indexes, and then we're going to hang out in the Russell 2000 first. But before we get there, like we said earlier in the show, when you're talking about equities, the flip side of that coin is volatility. So let's set the table for how we're looking this week. You know, it's been an intriguing period, I think, to say the least, over the last couple of weeks, as we saw Omicron kick in a couple of weeks ago, pronounced sell-off, vol roaring back to life, and then coming back off, and then coming back in, and then coming back off. Then we saw vol coming off pretty aggressively after Powell's speech yesterday. And now today, as the markets have started to turn, we see a bit of a sell-off again, especially in the NASDAQ. We're seeing vol start to creep back in again. Coming into showtime, we're seeing RBX, which is, of course, the VIX of the Russell 2000 at about a 33. It puts it down about 5 3/4 points from where it was this time last show. So still frothy, but down quite a bit from those elevated levels of last week. VIX coming into showtime was back north of the 20 handle at about a 20.5. That puts it down still a little over 8 points from this time last week. VVIX, so the vol at about 127.5, puts it down about 23.25 points from last week. Vol Q, so the at the money vol of the NASDAQ 100, aka the newest tradable vol product over there at CME land, 23.5. It's still elevated, but it's still down 2 from this time last week, though. And NASDAQ was off over 2%. So probably going to see that continue to tick up throughout the day. So that puts that VIX to RBX, so that small cap to large cap spread, at about 12, almost 12.5 points. That's pretty wide now. It's about 2.25 points wider than it was this time last week. A lot of that due to the fact that small cap vol has roared back to life, as we've seen just incredible rally, then an equally incredible sell-off out there in all things small cap. And the VIX to vol Q, so the S&P 500 to the NASDAQ vol spread at about 3 points. That's strangely enough exactly unched from this time last week. So NASDAQ selling off hard, and yet that spread not really widening out, which is kind of interesting. Derek, I know you monitor a lot of equity vol. Is there anything surprising you or interesting you of late as we've seen this Omicron volatility come roaring back into the market, then roaring back out, and apparently today roaring back in again?
Yeah, listen, I think it's important that we are both tracking volatility. I think it's way healthier when you see volatility up. That means that people paying attention to markets and entering and exiting positions. You know, when we've been awash in cash for so long, and that created a lot of risk tolerance. That's why we're seeing, you know, the VIX cratering at 10, 12, 14% and just sitting there, not going anywhere. It was so painful. So I think I'm encouraged when I see both volatility up, but volatility, you know, moving around intraday. I think the markets have so many different ways to play different risk parameters. So I think it's healthy. That's one of the reasons why we've had such great success in our short dated options, because when volatility goes up, premiums obviously go up, and that makes, you know, shorter dated, shorter term bets more attractive from a financial point of view. So it just means more people can come in. So when you're seeing volatility go up, it doesn't price people out of the market. So there's a lot of work we put into, you know, how we can help customers in both volatility rising environments and volatility decreasing environments. You know, do I have a view on where VIX is or should be, or where, you know, CVOL for energy or corn or commodities should be? No. If I did, I'd be a trader, wouldn't be working for the exchange. But what I can say is I think that I take it as a very healthy sign when we are seeing risk premiums return. We are seeing volatility head back up. And I think people are recognizing free cash, zero interest rate policy based on Fed Powell's announcement yesterday. You know, the price of cash is going up. So the risk-free return is going to go up, and volatility should go up with that. So we just want to make sure the customers know they've got access to the best risk management products on the planet at CME Group. They can access them real time on our front end, on their broker's front end, seamlessly, and trade in and out all day long, any hour of the globe. That's really, really important for customers to know. They can enter and exit their positions at any time of the day. So that's what we spend our time doing, and we're frankly, I'm heartened to see the level of volatility come back in this market a little bit. I think it's a more realistic understanding that the world is a risky place, believe it or not.
Now, I'm curious, looking at the CVOL offerings, obviously we joked earlier that equities and volatility are somewhat synonymous, but you guys made a conscious decision when you launched CVOL to pivot away from the equities a little bit. So you have vol of pretty much everything else except for equities there. Is that something you plan to add in the future, a CVOL for the equities?
Yeah, I think our focal point was looking at what are the gaps in the market, Mark. And when you look at the gaps in the market, it's pretty much anything outside of equities. And we've got the VOLQ product, and that's listed and traded on the exchange. And, VIX is out there. That's well known. We don't focus on what's already out there and, doing a me too. We're focused on what are the gaps in the market? What are the customers telling us that they need and don't have access to? And so that's what we filled first. Where we go with equities over time, it's a function of what the demand is from customers that see our broad suite of products and tools on the other 5 asset classes, and we're going to be guided by them. In the meantime, we've got our work cut out for us to make these real time and then consider where to go with there. But I'm going to tell you, in a world where risk premium is returning, where risk tolerance is declining, and where you're seeing people, wanting and needing to participate in a higher vol environment, I think these products are coming at an absolutely perfect time for the market evolution.
Speaking of evolution, let's see how much these indices are evolving this week since RVX is still frothy, well up into the 30 handle right now. Let's hang out in small caps right now. A lot of people have been asking us, first off, with the rally that we saw, that early Santa Claus rally in small caps, and then the equally as contentious sell-off we saw. It was official correction in Russell 2000 long before anything else. So let's see what's lighting it up out there this week. Coming into showtime, Russell 2000 at a 2146.5. Listeners off about 3% just this week. So if you look at it from just this week's perspective, small caps are actually breaking in. They're actually number 2 on our dark side if we just looked at it from the start of this week, listeners. But of course, we go back to the end of last week's show as well. And of course, it's an equity, so about 40% of the paper, which is pretty robust, closing in on 40,000 contracts this week. So roughly 40% of that is in the contract that goes out in about 3/4 of a day. So we're going to move a little bit farther down the chain to find something we can sink our teeth into, listeners. Let's go out to this end of month, I should say. D's contract has about 15 days to go. So let's go out there. That's right at our cutoff of about 2 weeks, listeners. Looking at the small cap vol, I said RBX was in the low 30s. And right now with the 15-day vol here in small caps, 31.73. So that's pretty much in line with what we're seeing out there in RVX. That's actually up 6, almost 6.5 points from this time last week. Skew-wise, the puts are going to be bid and the calls are offered. It's just a question of how much, and looks like both of those extremes got stronger over the course of this past week. Last week, the puts were 12.5% rich. They have to mind this week getting bid again, 16.2%. The calls last week, 9.5% cheap. This week, 12% cheap. So both extremes of the skew getting more extreme this week. And in terms of action, weirdly enough, usually it's what you guys ask about a lot with small caps are the small delta calls. And we did see some of those going up this week, the 2300s going out at the end of the month, which would qualify as smaller delta right now. But actually the most active contract this week, strangely enough, were the 2140 puts. So pretty much an at the money put going out tomorrow. It's very rare that we see that in small caps. Usually it's a little bit longer dated paper, and it's a far out of the money put. That's pretty far the expiration, or a far out of the money call. This week, it's a straight at the money put, the 2140s, trading pretty actively and opening pretty much every day this week. I can't remember the last time we saw straight at the money paper lighting it up out here in all things small cap. Maybe a sign that the paper is evolving as more folks are starting to discover this product. So interesting stuff. Let's look really quickly to see if we see any other aberrant prints out here. Like I said, the 2300s for the end of month, end of year, really D's contract. And we have a bunch of other put strikes that are more along the lines of what you would think. Also, the 2285s getting some traction out here in January of next year. Let's look really quickly and see if we can find what's. Those are all trading today, so no idea what's going on from an open interest perspective, but a lot of paper going up on the 2285s in Jan of next year. Those would certainly qualify as smaller delta calls as well. So there you go, listeners. If you wanted some small delta calls, we got that covered for you. Speaking of you folks, it's time to get you on the show really quickly with your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. This is, of course, a portion of the show where you guys get to take the reins, your questions, your comments. I thought this was a fun one, not just for the handle. The handle is fun, Devious Gin. Why are you so devious, Jim? But the question is a good one, especially for your semi-annual appearances on the show, Derek. Devious Gin wants to know, are there any products that were a surprise to you on the TWIFO program this year? I have a couple of thoughts for this, but Derek, you watch all things options over there at CME throughout the year. So I'm curious for you, maybe not just for the TWIFO program. Let's expand it a little bit. And let's say over there at CME this year, were there any surprise options products that came on your radar you weren't expecting this year?
Well, I would say maybe I'd catch that first in terms of maybe our own products. I was very, very pleasantly surprised with the uptake on our micro WTI contracts. I mean, that was not an option, I realize, but it's a directional that we're seeing a lot of retail players pile into. We had that conversation earlier. So on the just generally, that's one, because we had such a unbelievably strong first half of 2020. Expectations were muted for 21, and we've blown through that. Our energy business has done really well in the second half of this year. Particularly energy options have been just off the charts. And I think that then leads to my second point, which is very pleasant surprise on the weekly WTI option. That has been, again, the really pleasant surprise of this year. My expectations had been limited coming in, just, worried about the back half of this year. So that was one of those really happy surprises.
There you go. Two surprises from Derek. Yeah, Jen, if I had to say, there are two products that spring to mind for me as kind of surprises for the year. One of them is actually blowing the doors off today. It was in our movers and shakers yet again this week. It was livestock, in particular, lean hogs. They were our number one light side mover this week, and they're a pretty active contract. This was one, in the early days of this show, or in its prior incarnation, the long and short of futures options. Remember that one? But it's been a product that's been growing, and it never really did a ton of paper. But I'm looking at lean hogs right now, 25,000 contracts on the tape this week. So this is a product category where I think we're going to be talking about more, and just livestock in general, starting to see more options paper pick up out there, which is great to see. We want more options to talk about all the time. You guys are always asking us about things like oats or lumber, things that don't really do a lot of options paper. I would love to have options trading a ton on lumber right now. How much has it been moving over the course of the past year? But something like lean hogs is starting to get on our radar more, which is fascinating and I think exciting to mix up the product categories here on the show a little bit. And also, speaking of mixing it up, dairy, fluid milk, all that kind of stuff has been hitting our movers and shakers more often. By the way, we'll do this again next week, listeners. It's coming up on our end of year kind of look back show. So we'll run all the numbers for the biggest movers and shakers of the year, all the correlation numbers, all the other stuff. So stay tuned for that coming up soon, maybe next week on the show, listeners. When we run those numbers, we always see interesting correlations and interesting pockets of volatility in the dairy, which again is not an area a lot of people look at. They don't look at fluid milk or things like that, but it's becoming more interesting and more active. And I think one that surprised me a bit as well. So those would probably be my two stealthy surprise products of the year here for TWIFO: fluid milk / dairy and lean hogs. All right. An hour flies by when you're having fun, Derek. That music means we've come to the end of another episode of TWIFO. But before we go, Derek, you gave us a lot to look forward to. But if you want to leave our audience with anything else, any hints, any teases of what they can look forward to coming down the pike from CME, now is the time, sir. The floor is yours.
Oh, man. Well, my legal folks always kick me under the table if I start telling people what we're doing.
It's just you and me, Derek. There's nobody else. It's you and me talking. That's it.
And a couple of million friends of yours, Mark. I know how this thing goes. I will say, keep an eye on the CVOL suite. We have done a tremendous amount of work over the course of this year to put this data up on a end-of-day basis. As I said, we're very keen to get these things out into real-time calc for next year, and sky's the limit from there. And as I said, we focus on filling gaps. We talk to our customers. We listen to our market users to say, what is it that you would like that you're not getting right now, and how can we fill that gap? And that's why we've taken the tack that we have. And the other thing is keep an eye on ag options. I mean, as old school as it sounds, ag options, believe it or not, it's actually surpassed energy options on an average daily volume basis this year, trading just under 280,000 contracts a day. That's our fastest growing product set, up 14% this year. And I would say the number of new clients that we have brought on board, particularly in Europe and Asia, is something that I don't see that slowing down. I think we're going to continue to see outsized growth in Europe and Asia, not just during European and Asian hours, but also that crowd trading into the U.S. trading day as well. So you're going to see liquidity continue to improve across all of our products as we continue to build out better analytics and access points for our markets and things like CME Direct, and using tools like Bantix QuickStrike. It's the QuickStrike embedded into our front end CME Direct and up in our website is a critical part of how customers interact with our markets and help them make trading decisions. So those are the things I'm excited about, and I would say those are things that probably be drivers of growth for us next year.
There you go. You know where to go to find that and a whole bunch more, including our reports. CMEgroup.com/TWIFO will get you our reports. And of course, you can click around to your heart's content for education and everything else that Derek was just talking about over there. And you also know where to go to learn more about all things small caps. It is FTSERussell.com, FTSERussell.com. While you're there, you can click on, of course, the COVID impact database. That has been an intriguing one to watch all year. And I have a feeling more will be coming from that in the near future. Of course, give them a follow on the old Twitter while you're at it, at FTSE Russell. FTSERussell.com is the place to go. And we have to go on out of here, but don't worry, we'll be back again tomorrow, noon Central, 1 p.m. Eastern, with Matt McFarland from MIAX and Jem Carson to talk all things volatility on vol views. Then back again for all you Secret Club folks, 2 p.m. Central, 3 p.m. Eastern, to look at the week that was from an unusual activity perspective on options oddities. Then we kick off another week all the way through till next Thursday, another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.